Stavros Tousios for M4Markets. We're gonna continue the week with euro dollar and also the pound dollar today. It's interesting to see that there is some divergence between the two in terms of momentum, because as we've moved up on euro dollar, and currently of course we are correcting, which we also do in pound, by the way, in the short term. There are quite a few similarities in the short term. We do see that from the top and the other side peak over here, well, sort of lower peak, we can see a hidden bearish divergence. This in turn suggests that there might be a downside due, which has already started. Now the question is where it ends, right? Now typically, and based on Fibonacci guidelines, when we have a correction in that particular stage of an impulse to the upside, given of course and assuming that this is an impulse, like nearly 79%, let's say, then what is left for that correction on the next leg up, which is pretty much 21%, it's where we see prices correcting on that second phase of the correction. And that has already happened, and it's around 109. Now, based on that guideline, of course, okay, alone, this suggests that the correction might be finished. Equally, we are in an accelerated trend because we've broken outside this channel, and we have, for of course the bullish sort of narrative to play out, we have to remain outside that channel. So although that seems to be the 109 sort of level that we have to keep in focus, right? The potential for upside, of course, is going to be depreciating quite a lot in an imminent breakout or breakdown back within the channel, and that would open door to 107.80. At the same time though, we have to look at the full range of that leg and understand that 38 and 50 also come into the spotlight, because these are the Fibonacci levels that we need to pay attention to as markets move down. Now when it comes to pound, and here's the interesting bit, we see a break above the previous high, no evident divergence. Actually, we see convergence. Convergences are typically associated with breakouts, and until we get some sort of momentum divergence, that would suggest that there is no slowdown. Now, what I'm suspecting is going to happen, because we are very near to the top, is the moment we do go above that high, which is around 128.50, we are going to get a hidden bearish divergence. Okay, this looks, I want to say, pretty clear, but with high confidence I can say that if we go up above that level, there is going to be a divergence here, well, until the reason, of course. If it plays out, we're going to see some pressure above the high. If not, then this could just continue and also, you know, invalidate that signal as well. Now, in terms of levels, here's what we're going to do for the pound, because it's accelerated. We have come exactly at the 61.8 Fibonacci of that leg to the upside. So for now, we need to then look what's happening in the shorter term. We've also got quite extended up to 1618, which means now that opens the door potentially to the 200%, which is around, well, exactly where we came to. And then above that, we have 2382 and 2618. And this is around 139.39 and 129.96. There might be actually an attempt towards the 130, especially since the CPI came out and it actually came up much higher than expected. Now, a quick note that we've also accelerated here and accelerating. The second correction leg came down to around the 75%, which assumes a 75% in that leg, and it's already happened. We came down to around 30%, which is still okay. And the full leg, the upside, exactly rejected the 23 Fibonacci as well. So from the low and all the way up, there are actually very good similarities between the euro and dollar and pound, excuse me. But the difference is that pound still has convergences, okay, and momentum points to further upside, whereas the exhaustion of momentum on the RSI with the previous peak, and since of course it hasn't gone above its previous peak, suggests that there might be some sort of if not a decline, just some sort of consolidation before we see where markets could be heading next.